As a high income earning professional, you're probably going to do just about anything to decrease your tax liability. Now, here's the problem. Can you actually do it? Can you invest in real estate syndications and actually go get that depreciation and tax write-off and apply it against your airline pilot or doctor or lawyer income? If that's all you're doing is flying the line or a doctor or a lawyer and you have no other activity, the answer is probably no. But here's how you can actually do it. You can become what's called a real estate professional status, or otherwise known as rep status. Now, what is this? What is an actual real estate professional? This is what the IRS tax classification that allows real estate investors to use real estate losses from depreciation and cost segregation to offset your active income, like your W-2 wages. Now, pilot income or business income can also qualify. Without rep status, real estate losses are usually classified as passive and only can offset passive income. Now, passive income is just that. It's passive activity, like real estate investment property or passive rentals or a syndication. Active income is what you do when you actively go out and work, like fly the line or you're a doctor. Now, with a rep status, those losses, those passive losses, can actually become non-passive and offset income. Now, this is one of the most powerful tax strategies in real estate. And so there's really kind of two things that test you that you must pass in order to get rep status. So to qualify as rep status under the IRS rules, both tests have to be met each tax year. So the first test is the more than 50% test. Now, you must spend more than 50% of your total working time in real estate trades or real estate business. And examples of qualifying real estate work: property acquisition, asset management, leasing, development, construction, property management, operations, dispositions. So the 50% part is if you work 2,000 hours per year, at least 1,001 hour has to be in real estate itself. The second test is the 750-hour test. You have to spend at least 750 hours per year materially participating in a real estate trade or business. And now this is separate from your 50% test. You actually have to test against both. So both the 50% test and the 750 hours. So what actually counts towards real estate work? Well, qualifying real estate activities are going to include things like development, redevelopment, construction, acquisition, conversion, rental operations, property management, leasing, brokerage if you're actually licensed, asset management. But here's things that don't qualify you from this: passive investing, reviewing financial statements, attending investor webinars, reading offering memorandums, and things like that. So if you're wondering, like, I'm a full-time passive investor in real estate syndications, does that qualify? Unfortunately, it does not. You must be actively involved in operations or decision-making on the real estate itself. Now, here's the material participation requirement. Let's talk about that. So even if you qualify as a real estate professional, you must also materially participate in specific properties to use the actual losses that you're going to get. Now, here's some common participation tests that you can do: 500 hours or greater on the activity, and you're substantially all in participation. So more participation than anybody else in that actual investment. So many investors use grouping elections to treat multiple properties as one activity. So who typically kind of qualifies in this test? So common profiles are things like real estate operators like myself, developers, that's what I do, syndicators, that's what I do, property managers, you might be doing that, full-time landlords, and sometimes a spouse that qualifies and files jointly. So if you have a spouse that's thinking about becoming a real estate professional, you can get rep status through your spouse, and that's sort of the big industry secret. And you can do things like short-term rental operations. Special rules apply to that. And why most high-income professionals do not qualify for this, airline pilots, doctors, lawyers, attorneys, executives, is that you're going to usually fail that 50% test, primarily because your job is actually going to consume most of your working hours. Now, if you're a pilot like me, you know as an airline pilot, how many hours can you work per year? 1,000. So usually we have an easier time passing the real estate professional tax professional test, right? Because we only can fly 1,000 hours a year. We have our layovers we can work in and things like that and our days off, right? Now, just so you make sure you understand, you still are going to get the depreciation benefits that come from real estate syndications and real estate investment, but they're considered passive income. So things like passive income and distributions, you can use that depreciation to offset that, future gains on real estate, but just not against that W-2 income that you're earning at Delta, United, American, etc. And that's why rep status is so powerful. So if you qualify, cost segregation losses can offset your W-2 income. Bonus depreciation becomes immediately usable. You might be getting, on a $100,000 investment, you might be getting somewhere between $20,000 and $50,000, sometimes even more, of a tax break in the first year. So six-figure paper losses are also very common in this. You also get max tax deferral benefits, and but really, the IRS probably is going to audit you if you're doing reps aggressively. So keep a contemporaneous time log. Track your hours and your activity. Maintain documentation. Don't do estimates or backdating, right? That's what the contemporaneous log, like, you got to do it now. Like, you can't just be like, oh, at the end of the year I can go back and make up all my hours. You have to do it as you go. And so basically, in summary, to qualify for rep status, you're going to do at least 750 hours of work per year in real estate, and you need to spend more time in real estate than any other profession, so at least more than 50% of your time. So I hope you found this helpful. Make sure you keep those records if you're trying to hit rep status, and talk to your spouse if you want to make rep status a possibility for your family, because if your spouse is a rep and you're a pilot or working at a high income earning professional, all of a sudden your taxes filing jointly makes you both qualify, and you get those big tax breaks from passive real estate losses like depreciation and syndication. So thanks for watching. Catch you on the next one.